Welcome back to Investing Talk Podcast. We're here again to break down what's moving the markets and help you stay informed. Today, we're zeroing in on a real household name, a global giant. Nike? We're getting ready for their upcoming Q1 fiscal year 2026 earnings report, and there's a lot to unpack.
That's right. For anyone looking to understand, the forces shaping the consumer discretionary sector, Nike's report offers a really fascinating window. We'll be looking at analyst expectations, historical performance, key metrics, and the broader context to help you know what to watch for.
Exactly. And before we jump into all the details, if you find value in what we're doing here, please take a moment to subscribe, like, and maybe leave a comment. We genuinely love hearing from you. And hey, if there's a specific company or topic you'd like us to look into for a future segment, definitely let us know in the comments below. Your input really helps us tailor these discussions for you. So let's start with the immediate stuff. When are we expecting this report?
Right. Nike's next earnings report is projected for late September 2025. It typically comes out after the market closes, usually around 4:15 p.m. Eastern Time.
Okay.
And this report, it's going to cover their fiscal Q1 2026. That's the quarter that ended back on August 31st, 2025.
Got it. Q1.
Yeah. And for anyone who wants to follow along live or grab the replay, Nike's Investor Relations events page is the place to go. Replays are usually up within about 24 hours.
Perfect. Okay, let's unpack this then. What are the analysts actually saying about Nike's upcoming numbers? What's the street expecting?
Well, the consensus seems to be leaning towards a bit of a slight decline, actually.
Oh, really?
Yeah. For revenue, analysts are projecting $13.08 billion. That would be down roughly 2.4% year over year.
Okay.
And earnings per share, or EPS, that's expected to be $0.93 on a GAAP basis. That represents about a 7% decrease compared to last year.
A 7% drop in EPS. Okay, now here's where it gets really interesting, I think. I hear there's a whisper number floating around out there.
Indeed, there is. The whisper number for EPS is actually a little higher, sitting at $0.96.
96 cents.
Right. And this often reflects that unofficial market sentiment, maybe deviating a bit from the official consensus. It definitely raises an important question. Are the actual results going to align more with the consensus or the slightly more optimistic whisper?
Yeah, good question. And what about Nike's own guidance from before? Did he give any hints?
Well, for the full fiscal year 2025, Nike had guided for a low single-digit decline in revenue.
Okay, so they already flagged a slowdown.
Exactly. They also anticipated gross margin expansion somewhere between 80 to 100 basis points. They cited, demand headwinds, but also increased promotional activity as factors there. So that context is pretty crucial for understanding how this Q1 FY26 fits into their broader outlook, especially on margins.
That's seeing if they're on track with that margin plan. Okay, looking back can sometimes give us clues. How has Nike actually performed against these estimates in the recent past?
It's been kind of a mixed bag over the last 4 quarters of FY25, historically speaking. For Q4 FY25, EPS actually beat expectations by 4 cents, and revenue came in pretty much in line.
Okay, not bad.
But Q3 FY25 saw both an EPS and a revenue miss. Revenue was $11.3 billion against an expected $11.4 billion.
Ouch.
Yeah. Q2 had an EPS beat but missed on revenue. And Q1 saw EPS in line with the revenue beat. So it's been a bit up and down.
So a bit of a roller coaster. Okay, what did the market do right after those reports then? How did investors react?
The post-earnings price reaction, well, it varied quite a bit too.
Predictably, I guess.
Yeah. After that Q4 FY25 report, the stock was actually up 2.3% the next day and 3.9% for the whole week.
Okay.
But following that Q3 miss, it dropped significantly, down 6.1% the next day and a full 9% for the week.
Wow. Punished for the miss.
Definitely. Q2 saw a slight dip, 0.5% the next day, 2.4% for the week. Q1 had a modest gain, 1% next day, basically flat for the week. So it really shows the market can be quite sensitive to both beats and misses, maybe particularly on the downside for revenue.
That definitely seems to be the case. So are analysts getting more cautious now? What do the recent estimate revisions tell us? Have they been cutting numbers?
That's a really important question, and yes, it looks like it. Over the past 3 months, we've seen some pretty significant negative revisions.
Okay.
EPS estimates, they've been cut by 9% over 3 months, 4.5% over 1 month, and even 1.2% in just the last week.
Consistent cuts.
Yeah. And revenue estimates have also seen revisions downwards, down 3% over 3 months, 1% over 1 month, though they've held flat in the last week. This trend really suggests a growing level of caution among analysts looking ahead.
And how much agreement is there among these analysts? Is everyone clustered around that 93 EPS number, or is there a big spread?
There's actually a decent amount of dispersion, which kind of highlights the uncertainty. For EPS, the range among the 31 analysts goes from a low of 35 cents way up to a high of $1.07. The mean is 93 cents, but that's a wide range.
Yeah, that is quite a spread.
And for revenue, 29 analysts project a range from $12.8 billion up to $13.5 billion, with the mean at $13.08 billion. This spread just tells you there isn't a unanimous outlook. Different folks are weighing different factors differently.
Makes sense. Okay, beyond the big headline numbers like revenue and EPS, what specific metrics should we be digging into when the report drops? What are the key things to watch?
Gross margin. Absolutely critical.
Okay. Well,
Like we touched on, it was 44.6% in Q4 FY25, up 90 basis points year over year. Nike's ability to maintain or even expand those margins, especially with the earlier guidance, is a huge driver for EPS sensitivity. It signals things like inventory health and how much promotional activity they needed.
right, how much discounting?
Exactly. And inventory levels themselves are important too. At the end of May 2025, inventory was $8.6 billion. That was actually an 11% improvement year over year.
Oh, that's good.
Yeah, it suggests better inventory management, which, should help margins.
Definitely. What about performance in specific regions, like North America?
North America is key. Their segment revenue there saw a 5% year-over-year decline in Q4 FY25.
Decline?
Yeah, so its trajectory will be really closely watched. It's such a core market for them. And while they don't break out average selling price, or ASP, separately, the commentary kind of implies that the benefit they were getting from price and product mix is moderating a bit.
So maybe less pricing power than before.
Possibly, yeah. Something to listen for in the commentary.
Okay. And does seasonality play much of a role for Nike? Is Q1 typically strong or weak?
Absolutely. Seasonality is a factor. Q1 is typically Nike's seasonally slowest quarter.
Slowest. Okay.
Yeah, while Q4, which covers March to May, often sees higher inventory drawdowns and maybe more promotional activity heading into summer. So understanding that pattern helps put these upcoming Q1 numbers into the right context.
Right. Context is everything. Okay, it's not just about the pure numbers,
Yeah.
right? What's been happening at Nike and just in the broader market that could influence this report. Any big events?
Yeah, what's fascinating here is this blend of company-specific moves and these wider market forces. On the product side, Nike launched the Pegasus 42 running shoe and the HyperRev basketball franchise back in June 2025. These are important product cycles.
Okay, new gear hitting the market.
Exactly. They also announced a strategic partnership with the NBA for the All-Star 2026 gear in August. And organizationally, Heidi O'Neill was appointed COO in July, moving over from President of Consumer, Product, and Brand. That could signal a shift in focus.
Interesting, the COO change. And how do broader trends fit into this? Like what's happening in sportswear generally?
Well, if we connect this to the bigger picture, U.S. sportswear point-of-sale data, so actual sales data, it showed pretty soft trends year over year in June and July. It only got back to flat in August.
So the market's been sluggish.
Yeah, that's a headwind. The China market seems to be improving, but it's starting from a pretty low base and still faces really high competition there.
Okay.
On the cost side, input costs like cotton and freight, they've been broadly stable year over year, which is, helpful for margins, but not a huge tailwind.
Okay. I've seen some differing opinions from analysts recently. You mentioned the spread in estimates, but any specific upgrades or downgrades?
Yeah, this really raises that important question about market sentiment, doesn't it? JP Morgan actually downgraded Nike to neutral back in August 2025. They cited a lack of revenue momentum as their main concern.
Okay, worried about growth.
Exactly. But then conversely, Morgan Stanley raised its price target to $98 in August. They were more optimistic about the margin potential.
So focusing on profitability.
Right. These contrasting views really highlight the complexity of the current situation for Nike. Is it about growth or margins right now?
Yeah, definitely a tension there. Okay, switching gears a bit. From a technical perspective, what's the stock chart been doing? And what are options traders implying about the potential move around earnings?
Well, Nike's price action shows it's been down about 6% over the past month. It's been trading in a bit of a range, mostly between $72 and $78 since mid-August.
Okay, stuck in a range.
Yeah. Key levels to watch would be support down at $72 and resistance up at $78 and then maybe $82. In terms of implied volatility, the front week options, those are the ones covering the earnings expiry, they're sitting at 44%. The front month is a bit lower at 37%.
And what does that mean in terms of rank? Is that high or low for Nike?
Its implied volatility rank is at the 68th percentile. So, yeah, that suggests relatively high expectations for a price move compared to its own history. The market's bracing for something.
So what kind of move are options traders actually pricing in then? How big of a swing?
Okay, so based on the at-the-money straddle, the market is implying an expected move of about plus or minus $5.30.
530. What's that percentage-wise?
That works out to about 7.2%. So pretty decent move expected around the report.
Okay, 7.2%. And is there a directional bias in those options, leaning one way or the other?
Interestingly, yeah, if you look at the skew in the front week options, the 25 delta puts are trading about 6 volatility points higher than the calls. I mean, traders are paying up a bit more for downside protection via puts compared to upside bets via calls. It could indicate a slight bearish bias or at least more perceived risk to the downside.
Gotcha.
Liquidity looks pretty robust around the near money strikes, so trading should be fairly easy. And short interest is relatively low, about 2.0% of the float. So not a huge short base betting against it.
Okay, really useful context. So putting all this together, the analyst views, the history, the technicals, the market backdrop. Let's think about potential scenarios. What's the bullish case look like?
Right, the bullish case. That would probably involve Nike's revenue surprising, maybe outpacing that consensus number, perhaps driven by a stronger direct-to-consumer recovery than expected, or maybe that China market shows an early inflection point.
You'd also want to see gross margin expansion exceeding that 100 basis points year-over-year mark, benefiting from those inventory improvements and maybe lower promotions, and strong guidance, reiterating the full-year margin recovery plan, maybe some positive buzz around the new products like Pegasus 42. That would all feed into a bullish reaction.
Okay, that makes sense. Supported by, like, the Morgan Stanley view.
Exactly. And some of the past positive reactions to beats.
And on the flip side, the bearish case, what would trigger a negative reaction, potentially like that Q3 drop we saw?
The bear scenario would likely involve a miss on growth, either in North America or China, or maybe continued softness in their direct-to-consumer channels, suggesting those strategies aren't clicking yet.
Right.
Margins could disappoint, maybe missing expectations or coming in flat if promotional activity was higher than thought, or if those average selling prices were sluggish. And certainly, lowered full-year guidance or just a generally cautious tone about consumer demand would weigh heavily. That aligns more with the JP Morgan downgrade and some of that recent soft sportswear data. Okay, so if you had to boil it down, what's the key metric, the swing factor you'll be watching most closely?
I'd still say gross margin.
Gross margin?
Yeah, it's such a primary driver of EPS sensitivity, and it's a really clear indicator of inventory health and pricing power. How well are they managing promotions? That's key. And I'd add, the trajectory of China sales is probably the biggest potential wild card for an upside surprise.
Okay, gross margin first, China second. So putting it all together then, what's your overall leaning heading into this report? Neutral, bullish, bearish?
Considering everything, the weak revenue momentum we've seen, those negative consensus revisions sliding down, but also acknowledging that potential for longer-term margin improvement they keep talking about, I'd say the overall leaning is probably neutral, but maybe with a mild downside bias.
Neutral with a slight tilt down. And how confident are you in that assessment? Scale of 1 to 10.
I'd probably give it a confidence score of maybe 6 out of 10.
6 out of 10. Okay.
Yeah, we have reasonable consensus data. The options market gives us clues. But the macroeconomic picture, especially around the consumer and just category-specific demand, they remain pretty highly uncertain right now. Plus, those contrasting analyst views show it's not a clear-cut picture.
No, definitely not clear-cut. This has been incredibly helpful, really breaking it down. So for our listener tuning in, thinking about this Nike report, what's the biggest takeaway, the key thing to keep in mind?
I think the key aspects to really monitor will be that gross margin expansion. Are they delivering on that promise? And the sales trajectory in China, is there any sign of a real recovery picking up steam? Those two metrics, probably more than any others, will tell us a lot about Nike's operational health and its ability to navigate these pretty tricky market headwinds. And maybe a final thought for people to consider. How is Nike actually going to balance pushing product innovation and maintaining that super strong brand image with what seems like a challenging, sometimes soft consumer demand environment globally?
Yeah.
It's a really delicate dance, right? between premium positioning and chasing sales. Q1 FY26 will definitely offer some more clues on how they're managing that.
Absolutely. It's a constant balancing act. The world of investing never stops moving, and staying informed like this is really your best strategy. Thank you so much for joining us on Investing Talk Podcast today. If you enjoyed this conversation, please do hit that subscribe button, give us a like, and leave a comment with your thoughts. Or, hey, tell us about a company you'd like us to cover next time. We really appreciate your support and look forward to our next discussion.